Hi, Kristi Sullivan with Sullivan Financial Planning. Thanks for tuning into my video. Today, I am talking about cost basis. And specifically in the blog that I wrote that accompanies this video, I was talking about when you need cost basis, what happens if you don't have it, read the blog for more information. But on the video, I wanted to address kind of the opposite, which is when don't you need cost basis information, or when is it going to be easier to find? So first of all, you don't need to track cost basis in your accounts that are retirement accounts or college accounts for that matter. So 401ks, 403bs, IRAs, Roth IRAs, SEP IRAs, 529 accounts, those accounts are taxed not based on the difference between when you bought and sold a security. Those accounts are taxed as income or not, if it's a Roth or a 529, income based on your income tax bracket. So that's where those accounts are great if you're going to want to trade more or indeed have accounts with assets that generate more dividends or capital gains or income. Great to have those situations within your retirement accounts because cost basis doesn't matter. You don't need to track it. Some of you will find in your accounts, maybe say your brokerage accounts with Vanguard or Fidelity or wherever, they'll show you the cost basis in your IRA accounts. That's more for you to see if you made or lost money, but is not for tax reporting purposes. So you don't need to worry about it there. The other instance where you would need to worry about cost basis, but it was easier to know, is if you inherit money in a non-IRA account. So in other words, if you inherit a joint account that was your parents', for example, or an individual non-retirement account, the cost basis then becomes the cost or the value of the securities in that account, either on the date of death of the decedent or 6 months later. You can pick. And you'll know what those dates are much easier than you would know, say, oh, if my parents gifted me stock that they bought 50 years ago, you don't really know when they bought the stock. You don't really know when they're what the price was. So it's really going to be hard for you to know what your capital gains are when you go to sell the stock. When you inherit, it is a little easier. You'll still need to know the cost basis, but it can be discovered by looking at the value of the shares, either the day that your person that you inherited the money died or 6 months later, like I said. So it doesn't have to be super stressful in all occasions. Cost basis typically is something that we're stressed a little bit about on shares of stocks or mutual funds that were gifted to us, where the giftor doesn't know the cost basis, doesn't remember when they bought it, is not around to ask anymore. But again, the safest thing to do is just the IRS would assume a zero cost basis. In other words, you owe capital gains tax on everything that you sell the proceeds of the sale of your security. But you could talk to your tax advisor about that and maybe get a better answer. Anyway, that was a little bit rambly, but I hope you enjoyed it. I hope it was helpful. Thanks and have a great day.